Good morning. This is Linda Hall and Casey Guerrero of the Hall Guerrero team, and we're here today with our beloved lender, Ken Watson. And I say that because he's helped us personally and with our clients many times. He's helped my husband and I. I think we've refinanced our home 6 times, and many of our clients. And I think the key is the reason we really love him is because when things get complicated in lending, you need somebody that is really good at working through those obstacles in order that our clients can be successful and buy the house they want to buy. And that's what Ken does for our clients. He does it for people who hate data and for people who love data. Because my experience is there's 2 kinds of buyers. Often they come as a couple, which is really interesting. One of them likes as much data as you can throw at them, and the other one just says, where do I sign? And so Ken will customize that for those people, just what they need, but he needs to, and he does make sure that they make an informed decision before they jump into a loan to buy a home.
Thank you, Linda. Hi, my name is Ken Watson. I'm a branch leader and co-creator with Neo Home Loans, and I've been in the business for 27 years, and really real estate and financing is my passion. I just love just the whole industry, and I love being able to advise clients properly on their mortgage. And there's a difference, there's a shift happening in our industry. And I think it's something that's really important. Our industry has done one thing really good over the years, and that is sell people debt. But our industry hasn't done well, that we do very well, is help you manage that debt. So who you work with in the industry is really important when it comes to your financing, because when you have your personal balance sheet, you buy a home, that's an asset. On the other side is the liabilities, and someone needs to help you manage that, because your mortgage is going to be your largest liability that you're going to have. And if we can manage that forward, we can help you create wealth, reduce your debt over time, manage your equity, ultimately building legacy wealth for you to pass on to future generations. So that is really where we stand out. Most lenders will stop at the point that you purchase the house and say, congratulations. That's where we start. 70% of what we do starts at the point when you close on your house. 30% is just getting you to that point. So we have very much a passion for that as a company. And personally, I have a huge passion to help our clients manage forward on those things so that we can help you become a successful homeowner.
Yesterday was the Fed meeting, correct? As I understood, the results for the CPI and some other things came in better than analysts expected. In my opinion, Jerome Powell did not get too excited. Can you just share what your take was on that and what that is looking forward for our buyers that need loans over the next 4 to 6 months?
Yes, absolutely. The economy has really been a difficult situation for not only our industry, but for people for the last few years. And as far as this Fed meeting, getting the tamer CPI numbers really resulted in 2 things. One, it was motor vehicle insurance declining, and that really helped. And the other component is shelter costs. Those are the 2 biggest things that helped push CPI down. Everything else is running at about 2%. So if those 2 things moving forward continue to decline, we'll start to see inflation move down further. Now, Jerome Powell and the Fed in general, they're very conflicted right now, because they're conflicted between some economic numbers that have been coming out that may or may not be accurate, especially on the employment side, and how long do they hold the federal funds rate higher before they start to reduce that. Now, they were thinking it would be 3 cuts this year to the federal funds rate. Now they're thinking maybe 1. But when you take a look at their forecast for the next 2 years, they're planning on moving that down from 5.5% down to 2.5% by 2026. That's actually a pretty big cut over time. So what that will do is that will start to reduce the pressure on mortgage rates as well. So as they reduce that federal funds rate, the mortgage rates will start to move down as well. Unemployment is going to be a big thing to watch. If the unemployment rate gets to 4.2%, you probably will see the Fed make a move on a rate cut. I think that's going to be the catalyst, not so much the inflation, because inflation is, their mandate is 2%. That's probably going to take time to get there, maybe even 2 years to get to 2% inflation based on how inflation works. But unemployment is really a big issue right now. And the numbers coming from the Bureau of Labor Statistics have not been accurate if you listen to people on Wall Street. and they're starting to make noise about that. And we're starting to see more accurate numbers come in. And as that comes in accurately, you're going to see that unemployment rate move up, and then you're going to see the Fed make a move on that. So they're very conflicted as to how long to hold rates right now. If it's too long, they run the risk of pushing the country into a deep recession. If it's too soon, then inflation could come back again. So they're walking a very fine line right now.
That's interesting. Okay, so down to the nuts and bolts of somebody who might be looking to buy a house with us right now, the rates are hovering around 8%, give or take a bit, right? And they have been for a few months, right? So how do you help position a buyer who is, for instance, a first-time home buyer who's struggling to put together 20%, although we've talked many times in the past, that's not always the best option for a buyer. But how do you help them achieve what seems unachievable with these interest rates and these very high California real estate list prices?
So there's a couple things we do. That's a really great question, Linda, because affordability is a huge issue right now for home buyers. And so there's a couple of things that we can take a look at. One of the things we recently did with a client is, and it was a VA client actually, is we negotiated with the seller to get what's called a 2-1 buy down on the property. And so we were able to get his rate for 2% lower for the first year, 1% lower the second year, and then it moves up. And that gives us time as the Fed moves the federal funds rate down to maybe buy us a little bit of time to keep that payment down a little bit lower so that we have a couple of years to really manage forward on that. So that's one way to do it. The other way is to figure out what's the best blend of payment, down payment, rate. Where do we need to be with a client on that? So you don't need 20% down to buy a house. I think that's a myth that a lot of first-time home buyers think, is you have to have 20%. You don't. We actually have a lot of down payment assistance programs where you can come in with no money down because they will help you with assistance on getting that down payment. If you're a veteran, you've got a lot of great options. FHA, there's some great options there to put 3.5% down. So it really is client specific. And the main thing is, it's our job as mortgage planners to take a deep dive with that client, deeper than most lenders would probably take, to figure out exactly what their situation is and how do we put them in a position to succeed and afford a house. Because the last thing we want to do is push them into something that they can't afford. So there's a balance there that we need to work with on clients, and we take a very deep dive with clients to make sure that we're meeting that balance and helping them be successful moving forward.
Just one clarification. I know Casey has some. On that 20% down, I understand over years of doing this for a living that if you put a penny less than 20% down, you're going to pay mortgage insurance on top of your monthly. So I just want to clarify that what you just described, the goal is to make it more affordable for a period of 1 to 2 years. So even with the MI in there, they're going to pay a lower total mortgage monthly payment, correct?
That's correct. The other thing that we could do to combat that too is do what's called a single premium mortgage insurance policy, depending on their situation. For instance, if they maybe have a lot of asset or have some extra assets they can put at it, maybe they take $5,000 and do a single premium mortgage insurance policy where they don't have a monthly mortgage insurance payment. That makes that payment a little bit more affordable. So there's some options there that we can take a look at. We can also take a look at maybe doing a first mortgage to 80% and then doing a line of credit behind that in a second lien position. And these are getting a little bit into the weeds with maybe some first-time home buyers, but we can discuss it with them. But that's another way to maybe combat having to have mortgage insurance. So there's some ways around mortgage insurance that we could take a look at. It has to make sense for the client, but those are things that we can propose to the client and then give them plenty of options and then figure out what the best option is for them and their family.
Yeah, since we were talking about VA and FHA, is there any troubles right now with the new settlement, the NAR settlement, and paying buyers' agents and wrapping that up in the loan with a VA or FHA loan? Have you heard anything new about that, or are they still kind of at a hold?
Great question. Actually, VA came out with a circular yesterday on that, and they are going to allow that to happen. So they're going to allow their buyers to pay the commission. So we'll be able to structure things in different ways. Casey, you bring up a really good point about the NAR settlement. And this is something that we as a company, and myself in particular, have taken a very, very deep dive into, because I think the real estate industry and the lending industry aren't talking to each other enough about it. And what I mean by that is I think offers are going to get structured to the point where they get into underwriting and maybe have some issues. So I think in the future, moving forward, when that takes effect, I think on August 17th, we're going to have to talk with the agents a little bit deeper about offer structure and how to structure an offer so that we don't get caught up in a situation of underwriting on an offer we can't do. For instance, if you go in and put an offer in and then decide, well, now the buyer's got to pay the buyer's commission, let's restructure the offer in order to add, to the purchase price, and then go and put that amendment into underwriting. Underwriting will not allow that. Compliance will not allow that. So there's going to be some situations where people are going to get caught. We're getting ahead of the curve on that. And we have a lot of thought processes. And for instance, we're putting together what's called a commission gap strategy. Okay. What does that mean? The buyer's agent and a buyer, you're going to sign an agreement with an agent for how much you pay that agent. In the past, traditionally, as a buyer's agent, the seller paid the commission, right? Well, now the buyer has to sign an agreement with the agent. And let's say it's for 3%. You find the dream home for the client, but that client's only paying, or that seller's only paying 1%. So you got a 2% gap to make up. How do you make that gap up? Well, we have strategies around that already so that we are ahead of the curve on that. And I think a lot of lenders aren't understanding how this works. And I would say probably 90 to 95% of lenders out there don't understand how this is going to work, and they're going to get caught on it. So we're kind of putting some things together already to help the agents and to help our clients meet those commission gaps when they come up.
So I wanted to set the stage for a conversation that we're having with Ken here around the National Association of Realtors settlement agreement, which has been signed and will become effective August 17th. Initially, they said July 17th. We have one more month to figure out all the rule changes. There are many. Ken's speaking to a lot of the details on this in the lending options and solutions for this. But I think what's important and what I want to make sure that Ken agrees with is, as traditionally, as mentioned here, in the past, the seller signed a listing agreement that covered both side agency commissions, the listing side and the buyer's side. As of August 17th, that kind of gets into the blender and things are changed in some ways, but it's not doomsday. My understanding and my belief is there's going to be a process of negotiation around the buyer's agency commission, which would pay the buyer's agent. And I believe that's going to be collaborative in many cases. Sometimes I believe sellers who feel that it's wise will continue to offer commissions for the buyer's agency side. Sometimes they will say 0 because they think I'm just going to net a lot more money and the buyer's agent won't get any money. Well, guess what? There's no buyer's agent on earth that's going to work for free. Okay. And then sometimes it's going to be a combination. The seller might contribute, the buyer might contribute, the lender, is what we're hearing from Ken, is coming up with solutions to allow that buyer to structure it into the loan where the buyer can contribute without cash out of pocket up front. I think there's going to be a whole combination of options. And what we are doing is we're getting educated, and Ken's helping us on the lending side. What are those options? So we can explain that comprehensively to our buyers and to our sellers, because everybody's kind of freaking out right now. So thank you, Ken, for your input.
I agree with that 100%, Linda. You really laid it out beautifully in how that's going to work. I think what's going to end up happening is there's going to be a lot more collaborative work between the listing agent, buyer's agent, and the lender, and how deals get put together in the future. Where before, maybe it was just the buyer's agent and the listing agent working out a deal, and the lender comes in with the financing. I think the lender is going to get pulled into the conversation a little bit more with both sides and making sure that it's a situation that fits well for not only the buyer but the seller. Because really, ultimately, everyone wants to do is just sell the house, buy the house, and have the deal go through smoothly. And in order for that to happen, I think there's going to have to be a little bit more conversation up front, a little bit more work up front for us to do. And that's perfectly fine. And as long as you understand how the settlement is structured and what you need to do, then it could be very seamless for the client and really more in the background for the client. Okay. For a lot of lenders out there, they're just not prepared for it. And I think there's going to be some issues in the initial part of it. But if you are prepared for it and are planning for it, then I think it's going to be very smooth for both the buyers and the sellers and the agents involved.
Like any massive changes, and over my experience as a realtor, there's been a few really big changes that have come along, and people tend to get really scared of the things they don't understand or have never experienced before, and they don't know what to do. So our job as realtors and your job as our trusted lender is to educate, inform, clarify, guide, and ensure that our clients are making an informed decision, whether they decide to move forward and buy or back off and wait. It doesn't, to me, and that's why I've worked with you for these years, because you are also like we are. We're not going to shove a listing down anybody's throat. We're not going to try to make it fit. We're going to make sure that they understand if it fits, and they get to make the decision if they're comfortable moving into this loan, moving into this monthly payment, moving into this home. Is this right? Or are you just picking a house and trying to get it closed? So, and we're happy to do that too, if that's how you roll. But we want you to be informed, and that's our jobs, all three of us.
Yeah, absolutely, absolutely. I mean, we really need to be first and foremost. One of the reasons I love working with you and Casey is your value systems align with mine. And what I mean by that is you put your clients first. You put their well-being first. We don't need to do the transaction. What we want to do is we want to make sure that we're putting our clients first and making sure we're doing what's best for them. And I think that gets lost in our industry sometimes, where people are pushing for a transaction to get a transaction done and forgetting what the client's needs are. Okay. So if you're starting from that base of serving your client and serving their needs and serving their best interest, which you guys do, and that's where we totally align on, then everything is going to work out great for that client, in my opinion. Now, if they get into a transaction and things happen in the transaction, maybe that wasn't the right house for that client. Fine, let's move on. Let's find a different house, right? So you have to be prepared for that, and you have to prepare the client for that. But if you're putting your client first, everybody's going to be prepared.
Rate buy down, the mortgage insurance, working together. That's all stuff that we're seeing that we need to do right now. The other side of this is we're kind of seeing, we're working with a lot of newer buyers and working with family, maybe getting some assistance with the down payment. One thing I'm seeing a lot of is kind of this anxiety. They're so excited, they're running into it. They find the house that they love, and the second they put in this offer, they're just getting a bunch of anxiety. And I think it's starting from a lot of paperwork. And like going through, I've reached out to you personally and said, what do I need to do to qualify for this loan on this property? And just seeing the documents, I know that it could strike a lot of anxiety for people. What do you recommend doing in terms of pre-approval? When do you recommend doing the pre-approval? Before you start looking for a home? Right as you're going out with a realtor? In your opinion, what's the best way to manage kind of all of these moving parts? Because there is a lot of stuff, and if you do it right, you need to submit documents and paperwork and talk with a lender and talk with a realtor. From your side, what do you think?
So traditionally, how it has been in the industry prior to the housing market crash, typically, is someone wanted to buy a house, they would call their realtor. The realtor would then call their lender or connect them with a lender, and then they'd go find a house, and then we would start the financing at that point. That's all changed. After the housing market crashed, the Dodd-Frank Act went into effect. There's a lot of compliance and rules around how lending gets done, including what's called ATR, the ability to repay rule, meaning you have to show your income in order to qualify for the loan. So that changed how buyers buy homes fundamentally. because now, for the most part, you start with the lender and not the agent. And so the first step is to connect with your lender before even looking at a house. And that's different than it has been in the past. So you want to start with the lender. We do the heavy lifting up front. What's different with us as opposed to other lenders is we're probably going to put you into an underwrite ahead of time before even looking at a property for it to be determined property. Why would we do that? For a couple of reasons. One, we understand up front where our issues are. Do we have any issues with income, assets, credit? What are they? How can we overcome those? If we get the underwrite done ahead of time, we can then get conditions in. Now you go out looking at properties and you put your offer in and you're competing with 5 other offers. Guess what? You're going to the top of that offer stack. Why? Because you're essentially a cash offer at that point because your underwriting's already done where the other 4 offers still have to go in through underwriting. The listing agent and the seller are going to appreciate that more so than someone who hasn't been underwritten. So we're able to help you get that house, get your offer accepted easier by taking that step. The second thing it does, when you go under contract, that is typically the most stressful time for a client. Why? Because now it gets real. Money has to get wired to escrow. You've got escrow talking to you, you've got agents talking to you, you've got lenders talking to you, there's all these things are coming at you very quickly. So what we do is we slow that process down for our clients by creating what's called a contract meeting. We're the only lender that does it. Our loan coordinator will schedule a contract meeting with the client and walk them through the contract, walk them through the terms, walk them through how much down payment, help them get them direction on insurance and how to get that moving forward. All these things that have to happen at the beginning, we want to take a step back for the client and help them kind of take a deep breath before all that happens. And then if we have the underwrite done ahead of time, now the client can enjoy the home purchase process because the stress is taken out. Right. So if we've done the underwrite up front, now there's no stress.
Smaller steps earlier on.
Early small steps. Right.
There's a lot of different things that we can do as a lender that we do uniquely in our industry that other lenders don't do in order to help for clients on that.
So from our end, we have a couple listings going right now. We've noticed that we're getting a lot of offers from buyers and they're just backing out right away. Like are you seeing the same thing? Are you seeing this kind of uncertainty in some new buyers, and why do you think that's happening?
I do see some uncertainty in buyers, and the reason I think that's happening is because our lenders aren't doing a very good job up front letting them know why it's a good time to buy a property. So there's a lot of fear in with buyers today, and a lot of that comes from media reports, and a lot of it is misplaced. Okay,
right.
If you understand how to purchase a property, how to create wealth from purchasing a property, and understand rates and where they're heading to, then now's a great time to buy for a client to buy a property. Yes, rates are up, but guess what? Competition's down because rates are up. So you're competing with less people to buy a property, and you're starting the appreciation clock on that property a year earlier than maybe you would, right? So the cost of waiting is real. One thing that I do uniquely that I've never seen any other lender do is when we put the analysis together for clients to walk them through their options. One of the analysis we do is a future cash flow analysis. And what is that? That is a refinance plan over the next 3 to 4 years. Why do we do that? Because we know Wall Street's already telegraphed rates are moving down. We know from the forecast where they're supposed to be over a period of time. And so we can walk them through a series of refinances to reduce that payment and that rate from where it currently is down to where we think their forecast would be. Now we've created cash flow that could be redirected maybe to a retirement fund, a college plan, things of that nature. So we help manage forward on clients. And that's why I think when I said, I don't think lenders do a very good job of advising their clients. And that's why you're seeing them back out, because they have fear and no one's helping them walk through that fear and why it's a good time to buy a house.
Yeah, I think what you're seeing, what you just said, I completely agree with. And obviously we don't have that lending side, but from our side, I definitely see a focus on just getting into a house and starting a contract. And then it almost seems overwhelming in terms of finances, unless you did the work preemptively to take those small steps, get educated, and come up with a future plan. So you don't feel like you are hitting the ground running and it's all or nothing. It is part of a long-term plan that you're already comfortable with. You acknowledge where you feel comfortable and where you want to make changes. And I think that's what people are missing right now. And I think that's going to bring a lot of confidence to new buyers.
And that's 100% right. And that's why you as agents are long-term advisors to your clients, and me as a lender am a long-term advisor to my clients as well. So our mutual clients get the benefit of having long-term advice from the real estate side and the lending side. And that's what's needed. This is not a transaction. This is a relationship.
So, Ken, we're going to wrap it up for today, and I want to do this again because I think towards the end of this year, we're going to have a whole different perspective on lending with the NAR settlement, and I'd love to kind of catch that up later. Thank you from the Hall Guerrero team. We love working with you. We're so grateful for your wisdom and your guidance for us and our clients.